Good evening, everybody. This is Bob Iaccino from Path Trading Partners, along with my co-founder, Mike Arnold. It is August 13th. This is a weekend update Path Chat covering the futures markets, along with a little bit of a review of last week and a preview of this week. What can you say about last week? There are people saying we are on the brink, on the verge of nuclear war. I don't particularly think that, but who knows? There have been so many headlines coming out, both late last week and over the weekend, about strikes on the U.S. mainland, strikes in the waters off Guam, our military being locked and loaded. North Korea will be more sorry than any country in the history of the world. Strength, power, nuclear, death, all that stuff. Having said all that, you can see the spike that happened on the VIX because of all that stuff. That's exactly what that spike was caused by. I think you probably know that at this point. The equity markets, though, moved below their 50-day moving average in the S&P, was not able to get back above there on the S&P specifically. On the way back up on Friday, we essentially finished unchanged. And when that's happened in the recent past, it's extended for lower for a couple more days. And there's a chance we can see that play out this week as well. The markets are open right now as I'm speaking to you. And S&P E-mini futures are actually up very small, a little bit more than 0.25%. That's not bad. NASDAQ is actually up about 0.5% as I'm talking to you. And gold is actually off a little bit more than 0.1%. Crude oil is up also a little bit more than 0.1%. Let's go right into the earnings scorecard because we've pretty much got a completed earnings season for the most part. Key metrics as of Friday, with 91% of the companies in the S&P 500 reporting actual earnings results for the second quarter of 2017. 73% of these companies reported a positive EPS surprise, and 69% have reported positive sales surprises. For Q2 2017 so far, again with 91% of companies having reported, the blended earnings growth rate for the S&P 500 is 10.2%. 10 sectors are reporting or have reported earnings growth for the quarter, led by the energy sector. Guidance for Q3 of 2017, 59 of the S&P 500 companies have issued negative guidance, and 35 have issued positive guidance. The rest either no guidance or unchanged guidance. The forward 12-month PE ratio for the S&P 500 is 17.4 right now. This is above the 5-year average, which is 15.4, and above the 10-year average, which is 14. So that's a synopsis of the near complete earnings season that we've had. It is actually pretty darn good with the blended earnings growth rate and with the surprises on both revenue and EPS. Again, the week in review was focused mostly on North Korea. U.S. inflation rose less than expected. The CPI came out at 1.7% year over year, as expected at 1.8%. We've got trouble in Venezuela as well, where President Trump said that he won't even remove a military option for Venezuela. And the UK floated their idea for the divorce payment. The EU was originally asking for 50 billion to 100 billion, and the United Kingdom said they'd be willing to pay 40 billion. This is in euros. But that would only come on the condition that the payment is part of a deal that included the future trade relationship with the EU. They won't do it as just a standalone process. Again, I mentioned that inflation data. That was kind of muted. The odds of a rate hike dropped in the CME FedWatch tool after that happened, and we also saw the dollar weaken again. And we saw commodity prices get a little stronger in concert with the weaker dollar. We saw gold go up to 1,300. We saw Bitcoin rally quite a bit. We're not going to cover Bitcoin here, but we do cover cryptocurrencies. And we saw crude oil fall. It was another down week for crude oil, but we saw rig counts drop. Rig counts were actually down by 5 rigs total, but 8 of those were natural gas rigs. Crude oil rigs actually were up by 3. So to separate the two, crude oil rigs up by 3, natural gas rigs down by 8 for an overall drop of 5. That's about it in terms of the week in review. Again, coming up, I'm going to talk about some of the economic calendar, but I'm going to limit it to only ultra high importance figures because it really is going to be a geopolitical week. So it's not going to be, I mean, the data is going to matter. It always matters, but this is going to be a geopolitical week. So tonight we've got yuan new loans out of China. They're not out yet. We already had Japanese gross domestic product annualized, came out at 4%. The forecast was 2.5%, and the previous was 1.5%. So a big beat on Japanese gross domestic product annualized for the second quarter. Monday, August 14th, nothing on the high importance spectrum at all. Tuesday, August 15th, on the high importance spectrum. 1 a.m. Central Time, German gross domestic product year over year, expected to come out at 1.9%. Last was 1.7%. And the non-seasonally adjusted number has a forecast of 0.6. Previous was 2.9. 3:30 in the morning, UK Consumer Price Index year over year for July and the core year over year for July. The year over year expected to come out at 2.7 versus 2.6 last. And the core is expected to come out at 2.5 versus 2.4 last. And then at 7:30 in the morning, U.S. advanced retail sales for July expected to be up 0.4 versus down 0.2 last. Wednesday, August 16th, 3 in the morning, Italian gross domestic product, seasonally adjusted year over year, expected to come out at 1.4% versus 1.2 last. 4 a.m., you've got Eurozone gross domestic product, seasonally adjusted year over year, expected to come in at 2.1% versus 2.1 last. This is for the second quarter. Then we've got the FOMC meeting minutes at 1 p.m. Central Time. That's for the July 26th meeting. So that could move markets. And then at 8:30 Central Time, you've got Aussie employment change for July and the unemployment rate. They're supposed to add 20,000 jobs. That's what the forecast is, versus 14,000 last. And the unemployment rate is supposed to stay unchanged at 5.6%. Moving on to Thursday, August 17th. We've got one thing, 6:30 in the morning. The ECB account of the monetary policy meeting, similar to the Fed meeting minutes. So that comes out 6:30 in the morning. And then moving on to Friday, August 18th, only two high importance sector pieces of data. We've got the Canadian Consumer Price Index year over year for July, and we've got the University of Michigan Consumer Confidence figure. Canadian consumer prices is at 7:30 Central, year over year, expected at 1.2 versus 1% last. And the Michigan Consumer Confidence data, University of Michigan data, expected to come out at 9 a.m., and that's expected at 94 versus 93.4 last. That is all the high importance stuff. Usually I cover high and medium, but again, this is going to be all geopolitical, especially early in the week. Remember, some of the things that North Korea has said actually has target dates on them. Guam is late August. The strike on the U.S. mainland, they're saying this month. So this stuff is going to be in the news. Expect to see the VIX at least hover. Mike's going to talk about where it's been and where he thinks it could go and what the important levels are. So let me go ahead and turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Much, Bob. So you can see last few days VIX popped way up, actually opening at one point on our significant level. Hasn't been this high. We traded back in May a little bit, but didn't stay there very long, and some in April. And then the last time we exceeded this was back around the election, right before running up to the election. So we're going to see if this hangs out up here, collapses back out, collapses back down, or turns around and goes even higher, depending on what's going on with China and North Korea, and if the stocks continue their sell-off. Taking a look at the financial futures, starting with the Dow Mini Futures. Let's get this nice and zoomed in. You can see here, really nice sell-off straight down to the bottom of the rotation zone, holding this trend line. If we do break this trend line, then we're going to watch for a first target of about 21,635. Then we'll be watching for about 21,595. Then potentially all the way down to about the 21,500 level. If we do rally up, we have some overhead resistance coming in about 21,920. Then we'll be watching for 21,960. Then the 22,000 to 22,025 before you're running to new highs. We'd have to get to new highs, though, in order for us to even be interested in looking at these key levels higher. Switching over to the S&P. The S&P did break its trend line and the 50-day exponential moving average. Now we have major overhead resistance with this hooking rotation zone. First level higher we'll be watching for is 24.5250. Then the 24.60 area, which is a prior breakdown zone, followed by about 24.67. With this trend line, it did trigger a trend line trade, hitting the first area of target right there. The next full area we'd be watching for is about 2,416.50, and then possibly all the way down to the 2,410 area. Finally, for the financial futures, over to the NASDAQ, also triggering a trendline trade below the 50. Now a nice strong bounce back on Friday. Continue to move higher if we do. 58.68 to 58.86 is major resistance. This was prior support, now becoming resistance. If we do get through there, we'll be watching for a return to 59.35 area, and then the 59.72 to 75 area. This did also trigger a trend line trade, so we're still expecting some lower prices. Next key level down, 57.23. Then we'll be watching for 56.69, and then possibly all the way down to the 56.52. Switching over to crude oil. Crude pretty much caught in a range for over the last week. Broke down to the lower end of the range, tried to dip below the rotation zone, closing back up nearly into the range. So if we go higher, there's going to be some major resistance at the 49.60 area, significant level. Get through there, we'll be watching for about 50.25 and then the 50.75. And if that is broken, we'll watch for, there'll be a trend line trade with a target of, a full target of about 51.50. If we break down and get below the rotation zone again, we'll be watching for about 47.90, then a retest of the 50-day exponential moving average around 47.66, but that's going to keep rising. If we get down below that, the prior breakout zone right around the 47.07, and if we get below that and this trend line, it would trigger a trend line trade with an eventual full target of about 45.77. Switching over to gold. Gold did trigger a trend line trade with the full target reached of 1296.70 area. If we do get above this 1299 area, especially on a closing basis, we'll be watching for the 1310, 1314, and 1322 areas to the upside. If we pull back, first major area we'll watch is kiss the trend line goodbye, which is coming in about 1282. Then we'll watch to possibly dip to the prior breakout zone and into the rotation zone about 1275 to 1277. And on a bigger pullback, we'd be looking down around the 1269. Finally, to wrap up this weekend update, silver triggered a trend line trade on this key close on Thursday. So with that, we're watching for a retest of the 1718 level, then a run up to the 1741 area, and an eventual full target of about 1770. We might have to revise that with this declining trend line. We'll see how it reacts to that. On a pullback, major support coming in at 1689. If that is broken, kiss the trend line goodbye and rising rotation zone about 1677. And then if that's traded down, very major support coming in about the 1666 to 1661 area. That's all we have for you on this futures weekly recap. Turning it back over to you, Bob.
Thank you for that, Michael, and thank you guys for watching. Again, please hit like and subscribe. It helps us out a bunch when you do. If you like what we're doing, and check out our cryptocurrency updates, and also check out the Money Path podcast, which you guys probably know where to find it by now. Cheers, everyone. Thanks for watching.